Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap session for Friday, September the 16th, 2016. My name is Doug McKay. I am the founder and head moderator of Quantum Leap Futures. Each morning we get together in these live go-to sessions to take a look at the market, macro to micro, drill down to our trade levels, our targets, and our hypotheses today. We create multiple hypotheses based on what the market could do and therefore have a plan of action in place so that we don't have to think about what we're doing beforehand. We just do it. This is a subscription room, so if you want to come in and check it out, you can send me an email to quantumleapfutures@gmail.com. Unfortunately, there's no website, there's no blog. We do everything live in these go-tos in the pre-market, and then we do live trading and analysis during the course of the trading day. Before we get going, please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. Well, it is Friday. It is quad witching. So it is going to be a bumpy ride. We'll take a look at open interest. We've got open interest on both sides of us right now, so we're likely to get some large rotations and two-sided trading and see if we can cause maximum pain. Max pain for the SPY is at 216.50, up about two handles where it was from yesterday. Yesterday, our secondary hypothesis was a move down into the into the range low and failure to break out or a false breakout, and then a rotation up through and targeting that that 28, 29 area, and we're expecting to chop into the close on Hypo 2. Hypo 4 included the continuation and the trend. We did have a trend day. It wasn't a real strong trend day, but it was a trend day if we got above the daily ATR, and we were looking for a move up to our main target, which was up at the 40, 50, 42 area, and then we were looking for a possibility of a late day probe up into 51. So we got Hypo 2 played out. It played out a little bit higher than expected, a couple points higher, but then we got into Hypo 4, and they went and hit the main target, but they failed to get the late day probe, and we closed at 21.38. So it was a trend day. It was a good day. I didn't trade half of it because I made all my money early on, but it was a good day. So let's take a look at the macro. I always start my day with a candlestick chart. I start with a 9 EMA and a 20 SMA on the monthly, and I start working my way down to the intraday to see where we are, how strong the trend is on the different time frames. I'm looking for slope and separation, for strength of trend, and where the trend is being challenged or violated. Beautiful multi-year trend up on the monthly, challenged in the end of 15, beginning of 16, and now we've taken it back, and we're holding above the 9 and the 20. We're getting separation, but not slope. But we do have a possibility of a continuation pattern. We have a unadjusted high. We have a 21.9150 all-time high unadjusted. And then we have a December adjusted all-time high at 21.85. Rarely do those two remain unadjusted. Does that mean we're going to make it today? No, not likely. But I don't think the rollover and the big move is coming yet. I think we could find some support and push through to adjust these highs. And I am targeting 21.9150 if we get above certain levels we'll talk about. Excuse me. Going to the weekly, we had that rare 8-week run. It was only the third time in history in 20 years that we've had 8 bullish weeks. We almost got the 9th. That would have been only one other time in history where we had 9 straight weeks. But then we had the bearish week. They tried to hold it back, and then last week we had the big move down on Friday, and we took 8 weeks back of of positive gains. We tested the 9, the 20 on the weekly, but so far we've bounced, and we're trading in between the 9 and the 20, so we're in consolidation and challenging the trend on the weekly. On the daily, you can see we had that big day down, and now we've got slope and separation to the downside. We've got a start of a counter trend coming in, and we're failing to get back above the 9 right now. So we do have some weakness coming in as we move down in the time frames. In the 4-hour, we have started consolidating, and we're trying to get back above the and hold above the 9 and the 20. We just came back and took out this naked cross that we created earlier in the Globex session, and now they've popped back up, and we're getting the possibility of a counter trend change on the 4-hour. On the 1-hour, we did have that upward trend yesterday, and then the Globex, they've taken part of it back, but now we're trying to get back above the 9. We failed off of the 20 so far, but we've got consolidation coming in on the 1-hour. 30-minute, basically the same thing. We were starting to get a trend down, and since the global handshake between Europe and U.S. in around that 6 o'clock Eastern time, 6 a.m. Eastern time, they've started buying it back up, and right now we're trying to get and hold above the 9 and the 20, so consolidation on the 30-minute. As we move down to the 15-minute, you can see, same thing, consolidation, but starting to get the possibility of a upward trend. And on the 5-minute, you can see that we do have slope and separation, but we keep coming down and challenging the trend. So right now, as we move towards the RTH session and down in the time frames, we're getting some bullish activity and some buying coming in, but it's being challenged and absorbed. So let's take a look at the structure. Oh, I wanted to take a look at the open interest first, so let's do that. Can't do it on this chart. Come on. All right, so this is the expiration. You can see here's the open interest and the volume so far. You can see that we do have some open interest coming down into the 2100. You can see the 2100. You've got almost 29,000 contracts sitting there, which means they're likely to to come down and start pushing down into closer to that 2100 to cause some pain to these put holders. As far as the calls at that 2100, they're very light. We've got open interest above us. The heaviest would be right here at the 2150. So we could see some wild rotations. Fair amount of open interest above us and below us. So I think that both sides could be challenged coming into this OPEX. Okay, so let's take a look at the big picture and the structure. So we've got this this area that we fell out of balance. Just let me narrate and put it into context. So we spent a large amount of 2016 centered in around this distribution zone that the microcomposite VPOC and the composite VPOC. The composite goes back to the beginning of 2013. The most traded price is the 2035.50. It was 2042.50 before it was adjusted on the December contract. But we gapped up and we broke out of balance, and the last price that we accepted before we broke out and gapped up is the 2080.50. Then we get these multiple gaps. We got 3 gaps, and then we came up into this balance, and we chopped around this balance. They tried to take it higher and hold and go and make a new all-time high, and they can't. What do? They come back down, and now we're back inside of this, what was much thinner, okay, 5 days ago. This was really thin because we gapped through it, and we only spent basically 4 days in this area and gapped over a couple. And the most traded price since coming back down was up here at the 52 area, 51, 52, and it's shifted down now to the 21.1850. And we're getting this double distribution zone, one that centers around the 40.50, where we accepted price before we went higher, so we broke out of balance, we gap, 2 days we hold balance, we hold that that price in around the 39.25, and then we gap up again, and then we chop around and find price acceptance. So now we're back in this zone, and we've got this distribution zone around the CHVN at 40.50, and then we've got this wider, more blunt area that's, has the most accepted price at 21.1850, and then we got the 21.07, which is the key line in the sand. This is going to remain the key line in the sand below. The key line in the sand above is going to be the 44.50, and our warning line is going to be the 21.30 we are inside of this value area of the 4 days that has the high at 35.25 and the low at 16, and we're chopping around right now around that 30, trying to see if we're going to rotate up into the price acceptance at 40.50 or rotate down into the distribution zone and towards the price acceptance at the 21.1850. So take a look at overnight. Overnight we opened up at I think we opened, where did we open? We opened around the 21.30, 37.50. We failed to get any higher in the Globex, and basically we came down and we just sort of chopped around this 33 to 35 area, and then as Europe came online, they took it back down to the 28 and tested this LVN down here, tried to get below it, came down to where the value area low was from the RTH session, and then the buyer stepped in, and they've taken us up on news and came up into 35. We got a VPOC shift from the 28.25 up to the 35, and now it's shifted down to 32. So they're all over the place. But the most important thing is inventory is 100% net short overnight. So if we get above this 38.75, we really got to be careful in terms of the shorts getting squeezed, and a really quick move up into this 40.50 area and back up to take out the VPOC, which was shifted right in the close, on the close last night. Our overnight high is 38, our overnight low is 26.50, so no real good structure in the overnight, but the most important thing is the inventory is net short, and that's what we have to pay attention to right now. So let's take a look and start moving our numbers over. Our overnight high is 38. Our overnight low is 26.50. So fairly tight overnight range. Our current VPOC is 33, but it can shift. It's probably going to shift maybe multiple times, before we get into the RTH session. And then there's really no other information we have to pay attention to. We do have this LVN at 30.25. that's right by that key LVN. Don't need this anymore. Move this out. We've got that 30.25 here, and just below it, we've got the LVN, one of the LVNs at 28, and our midpoint at 29. So I'm actually going to use this area as my warning line. I'm going to actually move it down into the 28. And then our key line in the sand is going to be the 44.50. Just happens to be both the LVN, or CLVN, and the range high from yesterday. It is a weak high. A bit of a double top there. But if we get above there, I'm looking for a move up into the 52 area. Our daily ATR is running at 21.94 off of the bottom overnight. That puts our daily upside ATR target at 21.4850. Off of the overnight high, our daily downside ATR target is 21.16. And our weekly ATR downside target is the 21.07. So we could get to critical mass if we come down to this key line in the sand for the week. And that's all the information I need. The value area is not really anything that we can trade off of because of the fact it was a trend day. Come on. Sorry, I'm trying to move this to the front. It was a trend day, so the value area doesn't mean a lot on a trend day because there's no value. That's why you're trending. But we have found some balance overnight. And I'm going to use the LVN here at the 28.75.29. It really is going to encompass this whole area between the 30.25 and the 28.75. So I want to be above 30.25 if I'm taking a long from this area, and I want to below 28.75 if I'm taking a short. Obviously, the key target below is the overnight low, and then below that, we've got the 23.25. Come on. And of course, the big one, the major target, is the microcomposite VPOC at 18.25. Edit. All right, and then below, all our levels remain the same. We've got below the 18, we've got the range low at 14.50. That's going to be a trade area, and targeting the 13 and the low from the 2 days ago at 21.12. And of course, we're targeting push down to test the key line in the sand at 21.07. And if we get below the 21.07, it's going to be a push through to test the 2100 and go down towards those open puts and possibly a poke down into the 98 and coming and testing this gap zone that ranges between 97 and 95.50. The next big target below, of course, is down here at the 85 to 80.50 area, back to that microcomposite VPOC, which is where we accepted balance just before the or just after the breakout before we gapped up. So that is still the next big target below. Above us, we've got the key line in the sand, the 44.50. Above that, I'm looking for a move back up into 52 area and back towards getting back inside of this value. So you've got the 52 and you've got the 54.25, which is the microcomposite VPOC from this value area here on this microcomposite, and just a slow creep back up towards this double distribution zone and these two value areas that we just fell out of balance in. So what is, don't need this no more. What are my main hypotheses? Well, my main hypothesis is be careful. It's going to be a bumpy ride. Basically, I'm expecting us to make some large rotations in both directions. My hypo 1 is a open auction, out of range, a push up towards the 44.75. I expect the overnight high to be tested and move back up and take out the naked VPOC at 21.40.50, and then we either get a false failure to break out above the 44.75, or we break out, pop into the 52 area and find responsive sellers, and then rotate us all the way down through the range and move towards this 21.07 with possibly a late day probe, okay, afternoon probe down to the 2100. So hypo 1 is open auction, in range, a push up, a fail to break out, or a pop up into the 52 area, find responsive sellers, rotate down through the range, okay, come down and test the 2107 with a late day probe down to the 2100. That's hypo 1. Hypo 2 is basically opposite of that. An open auction, in range, a move down, and somewhere between the 14 and the 2107, finding responsive buyers and rotating us up through the range, chop around between the 44 and the 51 and pop us into this upper distribution and somewhere between the 52 and the 60.75. That's hypo 2. Hypo 3 is an open auction, in range, a push up to the high at 44, chop here, and then push up through into the 60.75 area and chop around in this distribution zone up here, centered around the 60.75 area. That is hypo 3, with the possible late day probe back up into the 70s. Hypo 4 is the opposite of that. Open auction, out of range, in range I should say, a move up, failure to break out, a strong push down into the lower distribution, then continuation, and a move down towards this 20.85 area and get a trend day down. It's anybody's game. If you're not on your game or you're struggling, this is not the day that you want to be trading. This is a day you want to watch or go do something else and start an early weekend. It is moves are going to come out of nowhere, and we could get some very strong moves in both directions. So if you are trading, keep it tight. Don't know where you're wrong quickly. Have your targets a little bit tighter today. Because you could get close to a target and then the opposing force comes in and rips it in the other direction. So it's I expect it to move quickly in the beginning, stall out, and then get a little bit rotational a little bit later in the day. Anyway, that's going to complete our pre-market session. As always, trade well, trade safe, and we'll catch you on the flip side.